Hello and good afternoon. IDFC First Bank announced its first quarter results on 31st July, disclosing a net loss of 630 crores, down from a profit of 94 crores in Q1 FY21. Let's quickly discuss the numbers first. Total income, net of interest expense, grew 36% year-on-year, and NII grew 25% year-on-year and 11% quarter-on-quarter. Net interest margins strengthened heavily and consistently for the bank, from 4.86% in quarter 1 FY21 to 5.09% in quarter 4 FY21 to 5.51% in quarter 1 FY22. On the back of this, the bank has declared its highest ever core pre-provisioning operating profit. The drag on profit though was due to provisions, which have been high across the sector this quarter. The bank provided for 1879 crores of provisions, of which 350 crores were COVID specific. Gross NPAs stand at 4.61%, net NPAs stand at 2.32%, with a PCR of 50.86%. When ET Now spoke with Mr. Vaidyanathan, CEO and MD of IDFC First earlier today, he clarified that a conservative provisioning formula has been adopted by the bank, ensuring that provisions are upfronted. He believes Q2 provisions will be lower and Q3 and Q4 to be even lower than in Q2. Retail NPAs stand at 1.82%, with the real drag being infra-related NPAs at 9.84%. On this front, Mr. Vaidyanathan also mentioned that unlike several corporate loans where recoveries almost never happen, retail loans see delayed recoveries. So while currently these accounts may be provisioned, these provisions may see some reversing in quarters ahead. On the asset side, gross funded assets grew 9% year-on-year. The bank, which is vocal about its retail transformation, saw CASA grow 98% year-on-year, with retail assets being 64% of gross funded assets. Mr. Vaidyanathan believes that each product the bank comes out with is a differentiator in the market, and that this strategy will help IDFC First take opportunities and become a larger bank. He also said that the bank is focused on the long-term big picture and that there could be cycles and pain in the short term. On the telecom front, he said that the total exposure is roughly 3,200 crores with a provision of 475 to 500 crores. Of this, 25% is funded exposure. He believes the risks in this regard are well provided for. There have also been questions surrounding divestments from the company by Mr. Vaidyanathan, to which he responded saying that there were certain donations and contributions he wanted to make, for which he had to divest a certain stake. Other than that, he reiterated that he remained fully invested in the bank and that there was little need to read much into this. The bank looks to be at a very interesting inflection point, and one may want to keep an eye on provisions and operational efficiency for the next few quarters. Thank you.